Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 12th, 2018. Happy Monday, everyone. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see here that price has bounced down off of the 2818s. That's last week's high there. And it's also previous highs right in this zone. We have pulled back just a little bit here over the last couple of days of last week, and then right now you can see bears are coming in to defend. And so if you kind of zoom in a little bit, you'll notice that prior lows right there are becoming resistance right here today, and you can also see that price is rejecting those levels above the previous session's midpoint. So basically this is setting up for bears to try and run these prices back down. Very similar to how it played out the week before, or a couple of weeks back, where price pushed higher here, pushed higher here. That was a Wednesday, Thursday, Friday. This was Monday, boom, right? This could be Monday, boom, back toward 2700. So again, that's what's looking like is developing right now. If there's any ability for price to push back above the 2800s, again, that could open things up. So if price pushes down, finds a rejection, and starts to work back up, perhaps we could start to see more strength. Again, overall, the market looks like it's found a pretty strong low after this recent rally. We could still pull back and be very, very bullish, as we would have sort of an inverted head and shoulder type of pattern here, with bulls looking to defend 2700 for a longer term push higher. Anytime you have a move this significant, there tends to be a lot of back and forth. So it might not be straight line higher. There tends to be a lot of back and forth first, and eventually perhaps we shake out to the upside. But again, any failure to hold 2700 could open up a retest back toward 26. So again, bulls need to come in and defend that zone. All right, let's take a look now at the NQ. Here's a look at the NQ. You'll notice very similar pattern again to the ES. You can see prior lows here, stop run day, now becoming resistance. Very similar to what happened here before. This again could offer a couple of days of absorption here with a shot at dropping back down. But how far do we go lower? Do we get to about 6,900, maybe 68, 65, 68, and then start to turn around? Again, that would provide kind of a higher low, 3-point reversal with the potential to see more strength down the road. So early weakness could be seen here today if price is able to reclaim the 7,100 level today. That would be very, very bullish if it were to close beyond that level. But again, we could see more back and forth here before this thing kind of straightens out one way or another. Early signs are pointing to the downside. All right, let's see here, crude oil. Here's a look at crude. Again, crude oil has been extremely bearish, very, very bearish. And I think that this recent weakness here has even emboldened nat gas to go even stronger up. One's just flying to the upside, this one is dropping big time. Again, no end in sight for this one. We are testing prices above Friday's high, right at the FOMC key level of 60.98. Again, that's a red flag in a downtrending market. Anytime you test a prior session's high and can't hold, you drop. You test a prior session's high and can't hold, you drop. And right now we're doing that again, and we are below that level. So again, it may be difficult to continue to short this thing after it looks very bearish, but there's no end in sight, there's no rejection. It continues to show signs of weakness. So again, failed new high could open up another round of weakness. At some point here, we'll want to see price pop back above 63.41, 62.70. So we're getting really far away from where we need to really start to get back above. So we're going to need to see a strong low, and that perhaps won't be seen until we clean out recent lows and perhaps even drop as low as 55s. All right, let's take a look now at gold futures. All right, here's a look at gold. You'll notice that gold got a pretty solid move lower here, broke below the prior pivot low. This is the one level we mentioned needed to be held. I mentioned before that we could perhaps test prices below it, but it needs to reject right away, and it did not. It closed below that level, continues to show weakness. This all started on a failed new high. Again, we knew the strength of that 1240 level, just amazing resistance, but that doesn't really break the pattern overall. We knew that this was a market that has been continuing to go sideways for the most part, with single days here that have pushed price from one side to the other. But for the most part, this thing is still stuck in the mud. We could easily bounce back up from these lows and still be in the range here developing, unless it really gives up 1200, and especially, you know, it needs to really break below 1180. That really sets this thing off to the downside, and that could still happen. But right now it's still developing in this range. It can't get above 1240. It's not getting below 1200 or 1180s, and right now it just appears stuck at the moment with a modest downside bias. If we take a look lastly at the YM, you can see the YM had a major reaction the previous week. Big time push to the upside through the prior pivot high, but did run into the bottom of the previous range. And also, this is where the major sell-off occurred to begin with. Almost got it all back, getting very, very close. So this has been a pretty solid recovery here for the YM. You can see back here as well, this low right here, 23,348, is an FOMC key level from the prior December. It's been in play, and right now the January FOMC key level is also in play at the moment. We've just recently rallied very solidly from the recent low, which was also 24K in that zone. That's the key range level, so it's really honoring these zones very nicely. But if this was going to turn down, it'd be again in this area. We have yet to retest the 8 period from above after crossing it, so if it were to come back here and form some sort of rejection, that could be really nice for continuation. But if there's any failure to hold above this level, say by the end of the day, if we're closing below it, you know, we could see this thing walk back down toward 24,866 or somewhere in that zone, and that could provide again another opportunity to defend, creating a higher low 3-point reversal type of pattern for a shot at least looking at a year-end rally. So we'll see how this plays out, but again, pulling back could provide a buying opportunity if the right circumstances are seen. Alright, that is it for now. Let's see how this plays out heading into the new week of trading. Good luck, trade well, and happy Monday.